Good afternoon, ladies and gentlemen. Future here. I've been meaning to expand my thoughts with regards to natural gas, but let's actually start. Let's go back to a chart that I posted back in December 17 on the website. So let's go over to FutureMeDead.com, and in the search box, we're going to type in either UNG or NG. Okay, now this is accessible to members. But here's the post. This is NG UNG Natural Gas Daily Elliott Wave Analysis dated December 17, 2015. So let's open that up. And this was an update to the big picture of the decline that began on February of 2014. You can see here we were working in an impulse wave that was very near complete. And we were expecting wave 5, that is parenthesis wave 5, to subdivide into a smaller 5 wave so that we can deem not only parenthesis wave 5 complete, but the entire impulse wave complete. So let's zoom in actually to the 2-hour time frame. And once again, this was published back in December 17. Okay, so this is a 2-hour time frame. 2-hour candlestick chart, and the wave count was as follows: waves 1, 2, 3. We were expecting a rally in 4, but one that should terminate below 205. We were expecting the rally to be corrective before giving way to a final new low in wave 5. Okay, so that was the forecast then. Let's turn over to the live chart. Okay, so we can see what has happened. I'm going to turn to the 4-hour time frame now. And you can see the rally that we were expecting continued to go higher than expected and invalidated the wave count at hand at the time being. So we can no longer say that this was wave 1, 2, 3, 4, because we never obtained a wave 5. So instead, this decline to a new low is a 3-wave structure. Because we are counting the decline from the very top of February 2014 as an impulse wave, this wave 5 cannot be 3 waves. It must always be 5 waves. So what has happened is wave 4 did not complete at this high here on November 15 of 2015. Instead, this rally was only wave A of a larger ABC corrective pattern. Okay, this is what is called an expanded flat. The reason it's called an expanded flat is because wave B, okay, goes beyond the beginning point of wave A. Okay, so this is wave A, 3-wave structure in B, and then we have a 5-wave move in wave C to complete wave 4. So this is what is called an expanded flat. Okay, 3-wave structure in A, 3-wave structure in B, 5-wave structure in C. Remember, I always tell you, C waves are always 5 waves. Even if wave C takes the shape of an ending diagonal, it is still considered a 5-wave structure. Okay, so what does this mean? It means that a low is not in. We need to see a 5-wave structure to the downside in this time frame to complete wave 5. Only then can we turn bullish. For now, the bias continues to remain bearish. Now, one of the things that led me to believe that this impulse wave could not be trusted to lead us higher. Number one was looking at the chart in arithmetic scale versus log scale. Now, we're looking at this chart in log, as you can see here. Let me turn over to the daily time frame, and you can see that log does provide us a wealth of information with regards to the termination points of wave 3, the termination point of wave 5 of 3, and you could even say it helped us determine a target for the termination point of wave B of 4. Now, if we take out log and go back to arithmetic, you can see very nicely the channel that I have drawn in blue has perfectly contained this sideways structure in wave 4. Very nicely done. So, and I'll actually add to that in that the impulse wave, the wave C of 4, took price right up to resistance. You can see here it provided support. On this occasion, it provided resistance. And moving forward, it also provided resistance as well. So I do not believe we are going to see a break higher above the termination point of wave 4. So we can remain bearish so long as we remain below. The exact price is 242. Okay, now let's zoom in a little bit to take a look at the wave structure of the decline so far. Let's turn over to the hourly, perhaps 2 hour. Okay, and this has the option to be what is called a leading diagonal, which is in the family of motive waves, much like the impulse wave. So this would be wave 1, 2, 3, 4, and 5. Okay, to complete a larger wave 1. So let me just draw that in there for you. Okay, this in turn would complete wave 1. Okay, this is one possible count. There is a more bearish count where this is a series of 1, 2, 1, 2, and a smaller degree first wave. This proposed bearish count would imply a significant decline almost immediately, whereas the leading diagonal being complete does allow for a corrective rally to correct part of this decline. Okay, in that case, we can simply pull out our Fibonacci retracement tool and do a simple Fibonacci retracement, the length of this entire move, put in our fib zone, and we could say if a wave 2 is now underway, it would be normal for wave 2 to retrace into the Fibonacci zone. The most common stopping point for second waves is the 61.8% retracement, which in that case brings us to 226. But second waves can be shallow. Deep second waves is merely a guideline. A common one and one I do trust. But either way, the bias is not to buy here. The bias is to go short once we go into the fib zone, as it should provide resistance. Now, negative towards the bearish case would be a material break of this blue channel that has maintained price. Okay. A material break of this blue channel would certainly give pause to the bearish case and perhaps suggest that the fourth wave did terminate here and we have a long-lasting bottom back in December, as imperfect as this is. Okay, but there is no reason to prefer an inferior count when everything is pointing lower. Okay, so that's it for now, guys. This is a quick lesson in use the tools at hand. In this case, switching between log and arithmetic did provide me a wealth of information, in addition to knowing the internal substructure of patterns. In this case, this is an expanded flat. Okay, and this has continued, this information has continued to allow me to maintain a bearish bias. As far as lower targets, we want to see a second wave retracement first before we can project a Fibonacci projection of wave 1 in wave 3 down. At the very minimum, we do want to see at least an attempt to form a double bottom here. So we are looking for a retest of 168 at least. That's it for now, guys. If you guys have any questions, please feel free to hit me up on Twitter at FutureMeDead or check me out at FutureMeDead.com. Best of luck.